When do you see the Fed first starting to cut rates?
September. That's a pretty consensus, non-controversial view. I think what could introduce some controversy is, talk of a 50 basis point cut. Now, that's not my base case. I don't think we're gonna get that, but that doesn't matter what I think. What matters is how do markets respond to new information, and how do you get ahead of them to make money? When I look at these things, it's not, oh my God, I think they're going to cut 50. I'm going to put a bet on, and hopefully they cut. And if they don't, I'll lose money. So that's not the way. That's not the way I do it. At least it's more of like, okay, here's where I think the puck is going. I'm going to position for it, and hopefully I can catch part of that movement. And when I do, I'll get out. And where it ends, I really don't care, as long as I was able to monetize part of that view. There's just no perfect way to trade these markets. They all involve an element of risk. So the way I control my risk is, I set a threshold of profits I want to capture, or hopefully capture, and then get out, and not become religious about where the puck ultimately ends. I think a lot of investors, or traders more really, that focus on, the terminal point of the puck is where they kind of get in trouble, because first, it's never a straight line, and second of all, that cannot be determined in advance. We can make guesses and take gambles, but where the marble ends up on the roulette table is unknowable until it stops.
No, absolutely. But right now we're at 5.25. How low do you think that the Fed will take rates, and in what time frame do you think it'll take for them to get there?
Yeah, so just kind of building on the same logic, I honestly don't know how much they're going to take rates, and that's going to be subject to, the rate of growth of the economy and the labor market and inflation. So, if the labor market starts to deteriorate quickly, then I think whatever is priced in will not be enough, and more cuts will get priced in. Conversely, if the labor market starts to firm up again, growth starts to firm up again, then they might have to take some off. So I think that's the way I view what the Fed is going to do. It's really that's why they call it a reaction function. The Fed is no better a forecaster than you or I or anybody else. They got the smartest people in the room, the biggest research budget. At the end of the day, they're also making a guess. They're also winging it. They're also making it up as they go along. But they have a reaction function. They react to the data. So I think what's more important to focus on is not so much, can I front run the data? It's, can I front run the reaction function? Can I beat the Fed at its own game? I think that is a better way to approach the problem set than the data a year out no one knows about. I have no idea what the labor market's going to look like in 8 months. I have no idea what inflation will look like in 8 months. I have a guess, but ultimately the Fed's going to react to that data as that data comes out. And so I just want to front run the Fed and anticipate the Fed's moves based on my understanding of growth, inflation, labor market, and what the Fed's objectives are.